Join us now. Look at the more internals and some pretty esoteric stuff. Amy Wu Silverman usually does, head of derivatives strategy at RBC Capital Markets. We've been struck, as you have, Amy, by the relative calm that we've seen. Friday got a little dicey, but then Monday and Tuesday, reversals on Monday, and S&P still not even in correction territory at this point. So you've gone from, I like both visuals. Used to be a duck. The market where it would slowly moving along, but underneath there was a lot of activity.
Duck feet.
Now you think it's like you've moved to a lobster in a pot. Sometimes it's a frog. Other people say a lobster, where you're kind of like, yeah, it seems warm. Next thing you know, you're dead and it's boiling water. So none of these things sound good for me for the underlying tone of the market. You're worried.
Yeah, I apologize for the abuse of these animals, but,
No,
you know.
Yeah, but neither one of them are no, the duck's okay.
The duck's okay. I mean, he could fall off a waterfall. But, you know, in terms of the analogies, it's just kind of the point of, you look at these volatility metrics. That's what we do in our world. You look at VIX. Yes, it's high, but it's not really that high when you actually think back to 2016 and 2022, how much higher VIX got. All these option metrics, people have described them as orderly. And, you know, that's great. I kind of like to joke 2022 was orderly from a volatility sense, but we still drew down 20%. And so the point just being, you know, we can slowly turn up the temperature, but at the end of the day, that lobster gets cooked. And that's my primary concern for kind of the steady march and the path dependency we've seen in a lot of these option metrics. It's not going to prevent us from potentially hurting at the end of the year with these sort of drawdowns we've seen in the past.
Yeah, you have a great memory. What were the lows in 2022, and what were our fears of what the new lows would be? It was down in the 3,000s, wasn't it? And the bear case was under 3,000, wasn't it?
Well, you know, 2022 was a really interesting market because if you had done systematic hedging, so if you simply owned put options, and we actually have an index that tracks that, the P-put, you would have drawn down 21% in a market which drew down 20%. So meaning if you had hedged, it actually had not worked. And it was a big fail from a derivatives perspective, which we're actually not seeing this time, Joe. This time, hedges are working. That same index is outperforming the S&P. But the issue is with options, it's not just direction, it's also timing. And so we haven't seen that gap down yet in the market. And the question is if we will at lower levels. But
the S&P almost doubled, and none of us really feel like that happened. It was very quiet, wasn't it? I guess what I'm saying is that at 5,600, or wherever, where did we close? At 5,600, I don't feel like I can say, wow, we're down 9%. What a buy it is here.
And you know, this is a big question that I feel like I've had with investors a lot, which is this ongoing debate of whether or not there still is this Trump put. And what I think is so interesting is that most investors still believe there is. And when I go back and I say, okay, but, you know, NASDAQ's kind of entered into correction territory, S&P is down 6%, how do you feel now? And their answer is it's just lower than you think.
The strike price was moved lower for the Trump.
Here's a very interesting question, because I was trying to figure out if the market is going to, if we hear things like 20% or less on the tariffs coming today, that's kind of, I would think, already been baked in because it's been fairly clearly telegraphed, unless you don't believe him, unless you think that this is just negotiation and those are not going to be real numbers, in which case, if they come in at 20%, maybe the market does have room to go down.
And that's
watching the market reaction is going to be very interesting.
This is my concern. And it's really interesting because it's very, you know, I talk to, I would say, investors across the pond, domestically. To me, it's a very kind of U.S. Northeast belief in the sense that there still is this S&P guardrail. Like, I don't think European investors believe that. And you've also kind of seen that in where the fund flows have gone year to date, right? But I will tell you, the big debate that a client asked me is what is closer, the Fed put or the Trump put? And most investors think that it's the Trump put. They still believe the guardrails are there. And I think until you shake that, these pricings of these kind of tariff announcements like today are going to be trickier than just headlines already baked in.
The question that I can't figure out is whether the number matters at all. Let's say 20% is your top number, great.
Yeah.
But if you tell me that it's going to then take another 6 months or longer,
which is what it sounded like Besson told lawmakers,
to actually negotiate whatever it's going to be, even if the ultimate answer is it lands at 10% or even lands at 5%, but you don't know. and therefore companies are still
And what are
sitting
they
on
gonna
going,
do
I
for
don't know what I'm going
earnings?
to do for the next 6
Yeah.
months. That unto itself, to me,
Well, I think
spells a challenge.
The idea Trump has a little switch here, says, okay, I'm going to stop the pain, and has a put. We don't know that it gets to a number where he decides to, where people decide, okay, the Trump put's going to come in. It could. He doesn't control what the stock market's going to do.
The toothpaste can't go back in the tube.
Yeah, right.
That was the analogy someone used for me, which I loved, which is like, people think he has this sort of like awesome power with regards to the market, and it's kind of like the toothpaste can't go back in the tube. And Andrew, to what you said, I think it's this duration mismatch, right? Like that this market has become a big duration mismatch issue in terms of what companies need to do, and then this kind of psychological betting of like, well, if it doesn't get done by midterms, then what does that really mean? Then do I have to do anything? Like, how long does it take to reshore manufacturing? And so the whole market's become this big duration mismatch, which ultimately comes down to a game of chicken. And if you don't believe there are guardrails, what's that gap down that we're not pricing in the market?